Google won big tech earnings night, but the real story is how close Microsoft came, why Amazon's quarter has a giant footnote, and why Meta's strong ad business still finished last on this scorecard. Charged Alpha ranked Microsoft, Alphabet, Amazon, and Meta using the same AI-assisted earnings framework. The final board, Meta scored 80, Amazon scored 83, Microsoft scored 89, Alphabet scored 91. So yes, Alphabet won, but the winner was not obvious until the numbers were stacked side by side. Here is the framework. This scorecard is not a buy list, and it is not financial advice. It ranks earnings quality across 6 categories: growth, earnings quality, margins, AI monetization, cash flow discipline, and forward demand. The goal is simple. After one of the biggest earnings nights of the quarter, which company showed the strongest proof? Let's start with the company in 4th place. Meta scored 80 out of 100. That sounds low only because Meta's core business was actually very strong. Revenue came in at $56.3 billion, up 33% year over year. Advertising revenue was about $55.0 billion, also up 33%. That is a monster ad business. But the scorecard is not just asking, did revenue grow? It is asking, how clean is the quarter and how much future spending risk comes with it? Reality Labs still lost about $4.0 billion from operations, and investors still have to underwrite how much AI infrastructure and long-horizon product spending will absorb from the core ad machine. So the short version is this: Meta's ad business was excellent. The spending debate is still real. That puts Meta in 4th place. Amazon scored 83 out of 100. AWS was the reason Amazon did not rank lower. Total net sales grew 17% to $181.5 billion. AWS sales grew 28% to $37.6 billion. AWS operating income rose to $14.2 billion. That is real AI cloud demand, and it is profitable growth. But Amazon's quarter has a giant footnote. Net income included $16.8 billion of pre-tax gains from Amazon's investments in Anthropic, and trailing 12-month free cash flow fell to $1.2 billion, mainly because of higher property and equipment purchases. That is the AI infrastructure trade-off in one sentence. Demand is strong, the investment bill is enormous, so Amazon takes 3rd place. Strong AI signal, but a more complicated earnings quality score. Microsoft scored 89 out of 100. This was the cleanest enterprise demand story of the night. Microsoft Cloud revenue was $54.5 billion, up 29%. Azure and other cloud services revenue grew 40%, but the quiet monster number was $627 billion. That was Microsoft's commercial remaining performance obligation, up 99%. That is not just a backward-looking revenue number. That is future contracted demand. Microsoft also posted diluted earnings per share of $4.27, up 23%. So, why did Microsoft not win? Because this scorecard rewards acceleration, not just durability. Microsoft looked extremely durable, but one company had stronger total revenue growth, a more dramatic cloud acceleration number, and margin expansion at the same time. Microsoft takes 2nd place by a narrow margin. Alphabet scored 91 out of 100. Alphabet did not win because of one number. It won because the quarter had multiple signals pointing in the same direction. Revenue increased 22% to $109.9 billion. Google Services revenue grew 16% to $89.6 billion. But the number that changed the scoreboard was Google Cloud. Google Cloud revenue grew 63% to $20.0 billion. That is the cleanest AI monetization signal in this group. Alphabet also reported operating income of $39.7 billion, with operating margin expanding to 36.1%. That combination is why Alphabet won: core business strength, cloud acceleration, and operating leverage in the same report. The caveat is still real. Alphabet, like the rest of big tech, has to prove that heavy AI infrastructure spending earns attractive returns over time. But based on this earnings window, Alphabet had the strongest report. So the final ranking is: number 4, Meta at 80. Number 3, Amazon at 83. Number 2, Microsoft at 89. And number 1, Alphabet at 91. Again, this is not a buy list. It is an earnings quality ranking. Alphabet had the best report. Microsoft had the strongest forward demand signal. Amazon had the clearest AWS acceleration, but also the biggest cash flow caveat. Meta had a powerful ad quarter, but the spending debate remains. The next question is what this means for the rest of earnings season. After this big tech batch, the AI earnings bar is clear, saying AI is not enough. Investors want proof: cloud revenue, backlog, margins, cash flow, and demand visibility. Charged Alpha is building AI-assisted earnings deep dives for nearly every stock in the US stock market. Subscribe for the next market scan, and check chargedalpha.com for the full stock library.